All right, so today we're going to do a deep dive into a book that I think you're really going to enjoy. It's Stan Weinstein's Secrets for Profiting in Bull and Bear Markets.
Uh-huh.
And this is a book that's really all about like using charts and patterns to sort of like read the stock market like a pro. And we're going to unpack all the jargon as we go, but I think it's going to give you like a whole new way to kind of look at the market.
Yeah, even if you're familiar with like fundamental analysis, like a lot of our listeners are, Weinstein's approach, which is much more technical,
Mhm.
really adds another layer of insight. And what I think is so cool about it is that it's really about recognizing patterns.
Mhm.
And these patterns often precede like really big market moves, and they've been repeating themselves, for decades and decades.
Yeah, and that was like one of the things that really opened my eyes reading the book was like just how much information is there, like hidden in plain sight,
Yeah.
right there on the charts. And so, Weinstein starts by like kind of shattering some common market myths. Like have you ever heard the saying buy low, sell high?
Yeah, occurs, yeah.
Right? It sounds so simple, but it's like in practice incredibly difficult to like time the absolute bottom and top
Huh.
of a stock's movement.
Yeah. Yeah, actually professionals, they're not really focused on buying low and selling high. It's more like buying high and selling higher.
Okay, so that sounds counterintuitive. How do you know when high is actually the right time to buy?
Well, that's where those patterns come in.
Hmm.
So instead of trying to like perfectly time the bottom, professionals look for stocks that are already showing some strength and that are breaking out above,
Yeah.
key price levels. And then they kind of like ride that momentum, as long as it lasts. But of course, managing risk is like super important.
Mm.
So, they have very specific strategies for knowing when to sell as well.
So it's not about like just gambling on a stock that's cheap. It's about like recognizing those signs of potential momentum before it's obvious to everybody else. Another thing that Weinstein kind of debunks is this idea that like obsessively following the news is like the key to success in the market.
Yeah. It's so funny because I think a lot of people think that, they need to be glued to, CNBC or Bloomberg or whatever. But if you think about it, like the market's always looking ahead. It's anticipating future events. So by the time like a news story hits the headlines,
Yeah.
it's often already been like factored into the stock price.
So instead of reacting to the news, it's more about understanding how the market is already interpreting it, even before we see it in the headlines.
Exactly. It's almost like the market has like a sixth sense. And that's where technical analysis really comes in. It gives you the tools to kind of decipher what the market is thinking
Mm-hmm.
by looking at those price and volume patterns.
I love that. It's like peeking into the future.
Yeah. And those patterns can actually reveal, shifts in sentiment
Mm-hmm.
and potential future trends.
It's like you're getting a little edge there.
Yeah, you are.
um, so speaking of like, future trends, Weinstein introduces this concept of market cycles. And I got to say, like, his stage chart is a game changer.
Oh, yeah. Yeah, it really is. It breaks down like a stock's life cycle
Yeah.
into 4 distinct stages. And each stage has, its own characteristics and its own opportunities and risks.
Yeah, it's like a roadmap guiding you through the different phases of like a stock's journey. So why don't we walk through those stages? Starting with stage one, like what should investors be looking for?
Okay, so stage 1 is what Weinstein calls the basing stage. And this is where a stock has kind of been declining or moving sideways, for a while. It often appears weak or maybe even undervalued at this point.
So it's not like the exciting part.
No, not at all. But this is actually an ideal time for savvy investors to start accumulating shares.
Okay, so it's all about like recognizing the potential before the crowd catches on. But how do you know when it's time to move from like accumulating to actually riding that wave of momentum?
Well, that's where stage 2 comes in.
Okay.
Stage 2 is the advancing stage.
Yeah.
And this is where things start to get exciting. You start to see the stock breaking out above, those key price levels. We call those resistance zones, like ceilings that the stock has struggled to break through in the past.
So a resistance zone is almost like a psychological barrier.
Yeah, you could think of it just that way.
And then when it breaks through, it's like signifying, like a real shift in sentiment.
Yeah.
And buying pressure.
Exactly. But it's not just about the price breaking through. We also want to see strong volume accompanying that breakout.
Okay.
Because volume reflects, the intensity of buying and selling.
Right.
So a high volume breakout tells us that there's real conviction behind the move.
Okay, so we've got a stock breaking out of base. It's moving upwards, strong volume, looking good, but nothing lasts forever, right?
Right. That's when we need to be aware of stage 3, the topping phase.
Okay.
This is where the upward momentum starts to slow down. You might see the stock struggling to make new highs, and the volume might start to decrease.
So it's like the party's starting to wind down. Time to be a little more cautious.
Exactly. And this is where I think a lot of investors, they get caught holding on for too long, hoping that the uptrend will resume. But Weinstein really emphasizes the importance of recognizing the signs
Mm.
of a topping phase and starting to think about taking profits or adjusting your strategy.
Because the last thing you want to do is ride that stock all the way down.
Well,
Which brings us to stage 4, the declining stage. This is where things can get really ugly.
yeah, it can.
Yeah.
And this is where discipline is like super important. Weinstein stresses having a clear exit strategy, using tools like trailing sell stop orders to protect profits and minimize losses.
Okay, trailing sell stop orders. We're definitely going to have to unpack that a little bit later. But first, we need to figure out how to actually identify those stage 1 stocks with the potential to move into those exciting stage 2 breakouts. So, like, how do we learn to read those patterns that Weinstein's talking about?
Yeah, for sure. But before we jump into like specific stock selection,
Yeah.
I think it's really important to understand how to gauge the overall market trend, because Weinstein has like a brilliant multi-layered approach to analyzing that bigger picture.
Okay, so we're talking about figuring out whether the entire market is in a bullish or bearish phase
Exactly.
before even looking at individual stocks.
Exactly. That's what we'll pick up next.
Okay, so we're like stepping into the role of like a market detective now,
Right.
like learning to read the clues that tell us, is the market kind of like poised for growth, or is it heading for a downturn? Where do we even begin with that?
Well, Weinstein gives us a set of really powerful tools for this, and they all revolve around understanding market trends. He actually compares it to sailing. You wouldn't set sail without knowing which way the wind is blowing, would you?
No, definitely not. I would probably end up totally lost at sea.
Right, exactly.
So what's our compass in the market?
Well, one of the key indicators that Weinstein uses is the Dow Jones Industrial Average, specifically its relationship to its 30-week moving average.
Okay, a moving average. Can you break that down for me? That sounds a little technical.
Sure. So a moving average essentially smooths out price fluctuations over a certain period, in this case 30 weeks. And this helps us see the underlying trend more clearly, kind of filters out the daily noise.
So it's like seeing the forest for the trees.
Exactly. Now here's where it gets interesting. Weinstein observed that historically. When the Dow breaks below its 30-week moving average, it's often a sign that a bear market is brewing.
A bear market meaning like a prolonged period decline.
Right. It's not a foolproof signal, of course.
Right.
But it's a really powerful warning flag that smart investors pay attention to.
Yeah, I mean, especially when you think about like the historical context.
Oh, absolutely.
He shows how this pattern played out before major market crashes, including the one in 1929.
Yeah, it's like a roadmap.
Yeah.
Showing us, where the market has stumbled in the past.
Yeah.
And giving us clues about, potential future pitfalls.
I love that. So the Dow is not the only tool in our detective kit here. What else should we be looking at?
Right. So another one that Weinstein really emphasizes is the New York Stock Exchange Advanced Decline Line. And this line measures the breadth of the market. Essentially, it tells us how many stocks are participating in a rally.
Okay, so it's not just about whether like the big name stocks are going up. It's about like the overall health of the market.
Exactly. Are we seeing broad-based strength? Or is it just a few stocks kind of carrying the load?
Right, right.
And here's where it gets really insightful. The advanced decline line often peaks before the Dow Jones does, signaling a narrowing of market breadth. And this can be an early warning sign that the rally is losing steam.
So even if the Dow is still hitting new highs, if the advanced decline line is starting to roll over, it's like a canary in the coal mine, like warning us that trouble might be ahead.
Yeah, that's a great analogy. And Weinstein actually provides historical examples of both bullish and bearish divergences between the Dow and the advanced decline line. And it's amazing to see how these patterns have accurately predicted major market turns.
This is incredible. I feel like we're starting to see the market in like a whole new light.
You are.
So we've got the Dow, we've got the advanced decline line. What other tools can we use?
Okay, so another one that Weinstein introduces is the McClellan oscillator.
Okay.
And this is an indicator that's derived from the advanced decline line. And it measures the speed and strength of price movements.
Okay, so this is getting a little bit more technical.
Yeah, it is.
But I'm assuming it's still based on those core principles of price and volume that we talked about earlier.
Absolutely. It's just providing like a more refined view of market momentum, helping us anticipate, those potential turning points with even greater precision.
I'm starting to feel like a market scientist here, like analyzing all these data points.
That's the spirit. And speaking of data points, another key factor to consider is market breadth. which we can track using the new highs, new lows differential.
Okay, so that's looking at the number of stocks, making new highs versus new lows each day.
Exactly. And if we see more stocks hitting new lows than new highs, even if the major indexes are still rising, it can be a sign of underlying weakness in the market.
So it's like checking the foundation of the market. Like even if the facade looks good, if the foundation's crumbling, the whole structure is at risk.
Precisely.
Okay, so to really get like a comprehensive view then, we need to look beyond just the US market and consider global trends as well.
Right. Because, we live in a global economy now,
Right.
and what happens in other parts of the world can definitely impact our markets.
So how do we gauge that global market sentiment?
Well, Weinstein recommends keeping an eye on Barron's World Market Average as a kind of proxy for how international markets are performing.
Okay.
And he points out that, a weak global market can often drag down U.S. stocks, even if domestic conditions seem strong.
It's like a reminder that we're all interconnected, even in like the world of finance.
We are. And here's kind of a surprising one. He suggests watching General Motors.
Yeah.
It's a bellwether stock.
GM, really.
Well,
What makes them such a good indicator of the broader market?
I know it might seem counterintuitive, but Weinstein shows that historically, GM's stock performance has often mirrored the overall market's direction. It's almost like a microcosm of the market, reflecting broader sentiment trends.
That's fascinating. I never would have thought that like watching GM could give us clues about the entire market.
I know, it's interesting.
Okay, so we talked about like the Dow, advanced decline line, McClellan oscillator, new highs, new lows, global markets, even GM. What else is there?
Okay, so one more. For a little bit of like contrarian insight, Weinstein introduces the cover story syndrome.
Okay, that sounds intriguing. What is that?
So he noticed that media headlines and magazine covers often reflect like extreme sentiment, either excessive bullishness or excessive bearishness. And he argues that these can actually be contrarian indicators.
Okay, so like if everyone is like super optimistic and predicting endless growth, that might be the time to start getting a little cautious.
Exactly. And conversely, if everyone is panicking and predicting doom and gloom, it might actually be a good time to start looking for buying opportunities.
It's almost like the media sentiment becomes so overblown that it creates like a self-fulfilling prophecy.
Yeah, in the opposite direction. And Weinstein actually gives a great example of this from late 1974, when a major financial magazine ran a cover story featuring a bear knocking down the pillars of Wall Street.
Oh, wow.
And this coincided with several of his other indicators turning positive, signaling that the extreme pessimism was actually a sign that the market was about to rebound.
So it's about reading between the lines and understanding the sentiment behind the headlines.
Exactly.
This is a whole new level of market awareness.
It is. And, the more you practice this, the more intuitive these patterns become. You start seeing them everywhere.
Okay, so we've learned how to analyze the overall market trend, identifying those potential bull and bear markets. But now let's get back to stock selection. Like, how do we actually pinpoint those promising stage 1 candidates that are poised for growth?
Well, that's where Weinstein's forest to the trees approach comes in. He breaks down the stock selection process into 3 key steps.
Okay, I'm ready to unlock those steps. Let's start with number 1. What's the first thing we need to consider?
Okay, so the first step is analyzing the overall market trend, which we just talked about.
Right.
The second is identifying the strongest sectors within the market. And then finally, we zoom in on the most promising stocks within those sectors.
So it's like a process of elimination almost.
Yeah, narrowing down the field
Okay.
until we find those hidden gems.
And why is the sector analysis so important?
Well, because not all sectors perform equally well at all times.
Right.
Some sectors might be lagging behind,
Yeah.
while others are surging ahead.
Right.
So identifying those leading sectors is really crucial for maximizing your chances of finding winning stocks.
Okay, that makes sense. So how do we figure out which sectors are like showing the most strength?
Well, Weinstein recommends using Standard & Poor's industry charts for this.
Okay.
These charts track the performance of various industry groups, and they give you a really clear visual representation of which sectors are trending upwards and which ones are lagging behind.
So we're looking for sectors that are like breaking out of their bases, showing that strong upward momentum, just like we look for in individual stocks.
Exactly. He gives some great examples in the book, like the airline and oil and energy sectors in the 1980s. Both of these sectors experienced really impressive rallies after exhibiting, those strong chart patterns that we've been talking about, signaling that a new uptrend was underway.
So we're not just looking for a sector that's like doing okay. We're looking for ones that are like showing real strength and potential for like significant growth.
Exactly. But here's another key point. We want to see confirmation of that sector strength within the individual stocks that make up that sector.
Okay, so it's not enough for just one or two stocks in the sector to be doing well. We want to see multiple stocks exhibiting that bullish behavior.
Exactly. It's about seeing that pattern of strength across the sector, indicating that the entire group is benefiting from like those favorable conditions.
Got it.
This gives us more confidence that the sector is truly in an uptrend and not just experiencing like a temporary blip.
Okay, so we've identified a strong sector with multiple stocks showing those bullish patterns. Now comes the really exciting part. Zeroing in on like the specific stocks that have the potential to become those like market-beating winners. How do we separate the true gems from the rest?
Okay, so this is where Weinstein's stock selection criteria come into play. He outlined several key factors to consider when you're evaluating individual stocks. The first one is we want to check for overhead resistance.
Overhead resistance. Remind me what that is again.
So that refers to previous price levels, where the stock has struggled to break through in the past. Think of it like a ceiling that the stock keeps bumping up against.
Okay.
And Weinstein actually uses both 1-year and 10-year Mansfield charts
Yeah.
to illustrate this concept.
So we're looking at the stock's historical price action to see if there are any like stubborn price levels that might act as roadblocks.
Yeah, exactly. And ideally, we want to find stocks that are breaking out into uncharted territory, meaning they're moving above previous highs, with no historical resistance holding them back.
So it's like a runner with a clear track ahead.
Yeah, no hurdles to jump over.
I like that.
He gives the example of Allegius Core in 1987. It broke out to a new high and soared
Yeah.
because there was no historical resistance to hold it back.
Wow.
On the flip side, he shows Pan Am, also from the airline sector, struggling to break through those previous highs, which ultimately limited its gains.
So past performance can actually give us clues about future potential.
It can. The next factor we want to consider is volume on breakouts.
Okay.
Remember, volume reflects buying pressure. So a high volume breakout
Mm.
is a much stronger signal than a low volume one.
So it's not enough for the stock to just break through that resistance. We need to see enthusiastic buyers kind of like pushing it higher.
Exactly. He uses Texas Instruments as an example, highlighting how strong volume accompanied its powerful move in the 1980s.
It's like a crowd cheering the stock on
Yeah.
as it breaks through those barriers.
Yeah. That's a great way to think about it. Then we get relative strength, or RS.
Okay.
And this compares a stock's performance to
Yeah.
the overall market. So we're looking for stocks that are not just moving up, but moving up faster than the market as a whole.
So they're like pulling ahead of the pack.
Precisely. He uses Data General and Goodyear Tire and Rubber as examples, showing how strong RS contributed to their outperformance.
It's like they're running their own race and
Yep.
winning by a mile.
Exactly. And finally, we want to look for powerful reversal patterns, like the head and shoulders bottom.
Okay.
This pattern forms after a stock has experienced a decline, and it signals a potential shift to an upward trend.
So it's like the stock is catching its breath,
Yeah.
getting ready to make a comeback.
That's a great way to visualize it. He provides examples like Unocal and ARA services to illustrate how this pattern is played out.
This is amazing. We're really learning to decode the market's language here.
We are. And the more you practice, the more intuitive these patterns become. You start seeing them everywhere.
So we've identified those potential rockstar stocks we've bought in. But now the question is, when do we let go? Selling can be even harder than buying, can't it?
You're right. It can be. A lot of investors get emotionally attached to their stocks, especially the ones that have done well. But as Weinstein emphasizes, having a clear exit strategy is crucial for protecting your profits and avoiding those big losses.
Because it's so easy to get greedy, right? And hold on for too long, hoping for those like even bigger gains, and then the market turns, and suddenly those gains are evaporating.
Exactly. That's why he recommends using trailing sell-stop orders.
Okay.
This type of order automatically sells your stock if it drops below a certain percentage of its recent highs.
So it's like a safety net that moves up as the stock rises.
Exactly.
So you're locking in those profits,
Yeah.
but still allowing for, some further upside potential.
Precisely. He illustrates this with examples like USX Corp and Kmart,
Yeah.
showing how trailing stops can really protect your hard-earned gains
Phew.
and prevent you from getting whipsawed out of winning position.
So it takes the emotion out of selling, lets the system do the work.
Exactly. It's a disciplined approach that helps you avoid making those impulsive decisions based on, fear or greed.
Okay, so we've talked about buying, we've talked about selling, analyzing market trends, choosing stocks. Is there anything else that Weinstein covers? that we haven't touched on.
He does actually delve into a few additional strategies,
Yeah.
specifically for investors who want to explore options beyond just individual stocks. So he talks about mutual fund switching, options trading, and futures trading.
So interesting. So we're expanding our toolkit a bit.
Yeah, we are. And the beauty is that he ties each of these strategies
Okay.
back to his core principles of technical analysis.
Okay.
So the same skills that we've been discussing can be applied to these other markets as well.
I love that. It just shows how versatile and adaptable his system is.
Exactly. It really emphasizes the importance of understanding those core principles,
Yeah.
recognizing patterns, gauging market trends, managing risk. These are the foundations of successful investing, regardless of the specific instruments that you're using.
Well, this has been an incredible journey. Through Stan Weinstein's world of market wisdom, I feel like I've gained a whole new perspective on how to approach investing.
Me too. His book is a true classic, packed with timeless insights that are just as relevant today as they were when it was first published.
Yeah, it's a testament to the enduring power of technical analysis and a reminder that success in the market is not about luck or guesswork. It's about having a system, staying disciplined, and learning to read the market's signals.
Absolutely. It's about empowering yourself
Yeah.
with the knowledge and the tools to navigate the market with confidence and make informed decisions that align with your financial goals.
Well said. So to all our listeners out there, remember, don't be intimidated by the market. Embrace the challenge. Dive into the world of technical analysis and start thinking like a market pro.
And most importantly, enjoy the journey. Investing can be both intellectually stimulating and financially rewarding when you approach it with a curious mind and a strategic mindset.
Well, thank you for joining us on this deep dive into Stan Weinstein's secrets for profiting in bull and bear markets. We hope you've gained some valuable insights and are feeling inspired to take your investing journey to the next level. Until next time, happy investing.